Asian equity markets fell again today, this despite oil prices picking up somewhat following record losses. But of course, worries prevail about the economic damage being inflicted by the coronavirus as vast parts of economies around the world remain closed and consumers are forced to stay behind closed doors. Over in Japan, the Nikkei share index ended the day down 0.74%. Hong Kong stocks were on the up, with the Hang Seng index closing in the black, up 0.42%. And mainland China was also firmer on the day, the Shanghai Composite Index closing up by 0.6%. Over in the United States, US markets continued to lose value on global growth concerns spurred by the impacts of the coronavirus, while a debate rages on as to how to prudently open up the US economy. The Dow Jones Industrial Average closed down 2.67%. The S&P 500 fell by 3.07%, while the tech-heavy Nasdaq lost 3.5% on the day. Let's take a look at the indicators. Well, for more on the markets, I'm joined via Skype by Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. Thanks very much for joining us, Makwe. So today, the local market looks like it's on the up, but the general trend beforehand seemed to be weaker. How are you assessing or characterizing the markets right now?
I think, good afternoon to you. I think there's still a lot of bad news in the market. Hence, we see the market continue acting the way it is. And as you said, now the market are cautiously up. And I think they're saying, listen, what happened with the oil price is okay for the past 2 days. And it's more of a rule of, wait for the third day to see what happens with the markets when we have serious volatility. Hence, people are back into the market today and it's bid up. But for the fact that there's just a lot of bad news, you've got tensions, whether it's between Europe and China, whether it's between US and China, and more importantly, people are still eagerly waiting to see whether we're going to get a vaccine. All well and good to see central governments or central banks putting money, easing policies, and also seeing the governments as well, trying to stimulate the economies. But what will give people some comfort, including the markets, that's when we see some serious progress when, number one, containing the spread, and more importantly, seeing that we will be able to get some vaccine of some sort.
You touched on oil. Of course, the oil price is right down. I know it was trading below $20 a barrel yesterday. That is Brent crude oil. But, it's all well and good it being low, but at the end of the day, it's not like economies are able to take advantage of that because most economies are closed down.
Exactly, and with us as well as a net importer, if we had some serious storage, then definitely we're going to buy that oil and wait, and put it into our storage. But like you said, it's a question of storage and bearing in mind, especially when it comes to the North Sea, there are a lot of vessels out there carrying oil, still looking for a place where they can store it. But I think the minute we see all these efforts, that governments are putting into place, starting to have a positive effect on the real economy, then demand will gradually start to pick up when it comes to oil. And also when we start to see the economy starting to reopen and are getting successful in reopening the economies, then there will be some demand. People will start going to work, people will start flying. So then demand of oil will be there. Then we hope that oil prices will eventually stabilize. But now it's a question of as much as you want to buy that oil, why are you going to keep it?
Yeah, but why don't we as South Africa decide to boost our strategic reserves, especially after the controversy years ago of, certain people within the Department of Minerals and Energy selling or allegedly selling our strategic reserves because the price is so low right now?
The question is, do we have storage? Say we do have storage. We just heard what the president said yesterday. No, but we don't have the money. We still have to go and borrow money just to fight COVID-19. We still have to go and get the money to boost our health department. And I think that's more important now more than anything. But as we are talking, government doesn't have money.
Yeah.
And whatever they're going to go and borrow, unfortunately, it has to go to the real thing, which is making sure that we contain this virus.
Okay, so now you've hit that subject. Of course, we had the president announcing this a very important economic stimulus to deal with COVID-19, trying to help small businesses and obviously trying to save jobs, even indicating that there's a hope that they can create jobs with certain of the money that they're raising. Just give us your response to it. Do you think it will go far enough in dealing with the problems that we're going to be faced with given COVID-19? And will it set us up in terms of a recovery thereafter?
I think it will go far enough is something else, and there's nothing wrong even if it doesn't go far enough. We've got that right to review. They've got that right as a government to say 500 billion, we thought it will do the trick, so let's revisit the whole issue, put in some more money. We've seen other governments doing that. Just yesterday as well, we just got the US Senate passing that bill, putting in extra $484 billion US dollars into their markets. So I think as the government, they are well within their rights, and these are the right steps that they've taken. And for whatever reason, if this is not enough, nothing stops them to go back and try to put money into the economy. But the question here continues to remain. We need to move at the speed.
It is always difficult when you're between the devil and the dark blue sea, which is what our government is in right now. But of course, they are going to be making, or they have made approaches to international funders, and we're hoping that they're going to get a decent interest rate level. We know that our debt trajectory is quite negative already. Are you concerned about our debt levels and, of course, the widening budget deficit and how we're going to be able to fund that going forward, especially given the fact that we are likely to not grow, but to contract as an economy this year?
I think those will still remain a concern for the next coming 2 years, our debt levels, the issue of the deficit. But what's more important here, we are lending or getting the money from the IMF and the World Bank if they get approval on the special programs. This is not your normal way of accessing loans from the IMF. So as a result, interest rates for other countries will be zero, and for other countries, interest rates will be very low. And conditions thereof are not your normal conditions when you approach them, say you are struggling with your balance of payment, stuff like that.
Yeah.
So I don't think we have to worry about that part. But yes, unfortunately, the debt level will continue to increase. But is it necessary? I think it's worth it.
Yeah.
This is one of those things that you say, this is a good debt to have.
Yes, indeed. One last thing, Makwe, before we run out of time. The president mentioned this 200 billion rand loan guarantee scheme. It's an initiative between the Reserve Bank, the banks and the government. How do you think that's going to work? Do you think banks are going to be lending at a low interest rate or interest free? How do you think it will work? We've still yet to get the details.
I think interest rates are low enough for people to go. What's more important is that on normal situations, people will be unable to qualify. Banks will require all these funny collaterals. The bank will say this and that, but this time around, banks will be happy to lend out because should you default, then they've got the big brother who gave them a guarantee in this instance. This time it will be the government.
Yes.
So I don't think interest rates will be tampered with, but at least that surety, people can still go without even having the collateral.
Indeed. Makwe, thank you very much for your time, sir. That was Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. We're going to go for a quick break and have more news.